Holy smokers, folks, that ain't no dang jokers. Look at my retail trader investor type stocks list here. Hood down 19.5% here today. Coinbase down 17.5%. MicroTrageedy down 16.5%. Tesla Maslow down 15%. AppLovin down 12%. Palantir down another double digits here today. Himstock down 4.3% here today. Big tech getting obliterated all over the place. Tesla Maslow down 15+%. Shopify getting hit hard. Snowflake getting hit hard. MU, Avago, nvidia continues to get hit here today, down another 5+%. Volatility has picked up immensely. The VIX up 74% just in the past month. Oh my gosh. Okay, so we're in what's called a small correction right now. You heard me right, small correction. A small correction for the S&P 500 is anytime the S&P 500 goes down from a recent peak, about 5 to 10%. That's a small correction. And that's what we're in as of right now. The S&P 500 has dropped about 8.6% as of right now. A large correction in the market for the S&P 500 is around a 10 to 20% drop. So we're in small correction right now, not even in a large correction yet, right? Keep in mind, a crash or a bear market, that's usually when the S&P 500 goes down over 20%, right? And the more it goes over 20% down, the more dramatic that fall is, okay? Now, 4 core subjects I want to speak about, very big subjects in this video here today, okay? First one is how millionaires are made during these large corrections in these bear markets, because there's actually 2 ways you can change your net worth forever when you're going through, and this is where the most money's made. Most people think the most money's made, you know, when you know, the market's at all-time highs or something like that. No. Right now is when the next generation of millionaires will be made and are being made right now. And so we'll speak about that at the top of this video. Second core subject we'll get into in this video is why people are freaking out over this small correction. Because I actually want to put some time into this, because I'm like, I look at it, I see friends out there freaking out. I see people on X going crazy, like YouTube, like people are losing it over this small correction. We're not even in a large correction, and people have just completely lost it already, just freaking out. And I put a lot of time into that, and I'm going to explain why I believe that's occurring, okay? Third thing we're going to get into in this video is what I bought today. I bought $60,000 worth of stocks here today. And a last subject we'll speak about is, I definitely had a lot of people reach out and be like, you know, you're so sanguine, you know, you're so chill, you don't seem flustered at all like you were back in, you know, let's say 2022, like why I feel great. And so we'll discuss that in this video as well. Okay, so 4 big subjects today. Hope you guys enjoy this video. I appreciate y'all joining me as always. One thing only I need from you guys: smash that like button on this video. And that's it, man. I don't need anything else from you. That's it. Just smash the like button. If you want to subscribe, you can certainly subscribe. We're 840,000 subscribers deep now. Holy smokers, that ain't no jokers. Additionally, if you need help understanding income statements, balance sheets, cash flows, how to value companies properly, how to figure out if you're getting a great deal, bad deal, how to run a portfolio properly, you want to be around a group of investors that have 6, 7, 8 figures invested. That's my private stock group. You can apply with the pinned comment down there. This is the best time to get involved with a group like this. Unfortunately, a lot of people like to join a group like mine when the stock market's at all-time highs. When you're going through corrections and crashes, that's the best time to actually join. That's the time you want to be focusing on this stuff, figuring all this stuff out, how to actually do this. Or just wait till next all-time highs and then you can join, okay? It's up to you. Pinned comment down there. Alrighty, so first one up here, how millionaires are made in large corrections and in bear markets ultimately, okay? So, very important to start right here, okay? What I'm showing you here is where stocks were, right, in Q4 2021 and where they were in Q4 2022. And what you're going to find is, you know, stocks like Netflix, nvidia, Meta, you know, Shopify, those stocks fell like 60%, 70%, peak to trough. Absolutely got decimated, right? So one way you could have got filthy rich is you could have looked out there and you could have said, you know what, this whole inflation thing, because at the end of 2021, there was an argument being made by the Federal Reserve and by other investors that, you know, inflation is just transitory. It's all going to be good. We're all going to be fine. And the market just went to all-time highs after all-time highs all the way into the end of 2021. If you would have taken the opposite approach there and said, you know what, I don't think this inflation is transitory. I think the Federal Reserve is going to have to start raising interest rates and then raise interest rates dramatically, right? You could have bought one-year output options and got absolutely filthy rich, because you got to understand, no one was planning on Netflix, Meta, stocks like that falling over 50%. Never mind 60 and 70 and 80% falls. No one was planning on that. So if you had been buying put options going into 2022, like that was certainly a way you could have got absolutely filthy rich. Sometimes you got to look the opposite way, and if you see a problem that's emerging out there and no one has noticed it yet, then you're on to something. Right? Now, since then, we've seen this happen to those same exact stocks. Shopify is up 188%. Netflix is up 232%. Meta's up 558%. Nvidia is up 655%. And that's after this correction we just had, where actually the NASDAQ's down about 16%. The NASDAQ's down about 13%. So even though the NASDAQ's down that much, you've still gotten that for gains, right? So there's been fortunes made on the long side. You don't even have to play call options coming out of that in 2022, right? Certainly if you play call options, 1 year out or 2 year out call options, which you can get leaps easily, because also no one was anticipating at the end of 2022 that these sorts of stocks were going to jump 2x, 3x, 4x, 5x over the next year or two. And they all ended up doing it essentially, right? And so that's a way you could have played it, or you could have just bought the stock straight up and made absolute fortunes, like, folks like myself are fortunate to have made, right? Where you put, 100 grand into one of these stocks, and next thing you know, it's $500,000, $600,000, $700,000, right? And in a pretty short amount of time. Now, what everybody was telling you to pile into at that particular time was what type of stocks. If you watch my reaction channel, I react to Wall Streeters all the time, and I actually started that channel in 2022. It's a perfect year to start it. And back then, the Wall Streeters were all saying, you need to be piling into oil and gas stocks. You need to be piling into, stocks like McDonald's, Starbucks, those sorts of companies. Because also people were thinking we were going to have a recession in 2023. So people are like, we got this inflation, we're going to have recession, maybe we're going to have stagflation. Like it's ugly. So go to safety plays, go to Starbucks, go to McDonald's, go to oil and gas stocks. Forget Meta, forget Nvidia, forget Netflix, Shopify. So if you had done that, the stock price performance you would have gotten, let's say instead of buying Nvidia, Meta, Netflix, Shopify, you said, you know what, those are such great companies, such great growth companies that have growth for the next 10, 20 years. But you know what, I'm not going to buy those because everybody's freaked out short term. I'm going to buy McDonald's and Starbucks and ExxonMobil and Chevron. You have 15% gains in McDonald's. You have 10% gains in Starbucks. You have negative return in ExxonMobil, and Chevron's giving you negative 14%. This is where it matters significantly where you're allocating money in a correction or a bear market. Because I can tell you, if you're buying those stocks, you have little to nothing to show for it all these years later. However, if you were buying Shopify, Netflix, Meta, Nvidia, those sorts of stocks, you have fortunes of gains you're sitting on, even after this 13% drop in the NASDAQ. I mean, the NASDAQ could drop another 13 percentage points, and you would still be far exceeding any of these other stocks. Literally, you could have the NASDAQ drop another 13% from here, and then go down 26%, 27%, whatever. And you would still be looking great. You could have the NASDAQ honestly probably fall 30+%, and you would still have done far better if you were buying Nvidia, Meta, Netflix, Shopify, those sorts of stocks, versus buying ExxonMobil and all the ones, hey, get a double cheeseburger and a double pump latte, okay? Come on, man. You got to know what you're doing in this game, right? Now, the hated stocks, I take you back to the great financial crisis and show you this once again, right? You got to understand, it's not just about allocating money, and basically that's just a fancy way of saying investing money into stocks during a bear market or a crashing market or a correction market. It's about understanding where the best opportunities are in there. So now I'm taking you back to the great financial crisis, okay? Which, there's probably not that many people watching this right now that you were investing back in the great financial crisis, right? It might be 10% of the viewers right now were investing back then, right? So back then, you could have invested, let's say fall 2008, the whole market's in a crash, blah, 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 right? You could have picked the stocks that people were loving at that time. What were the stocks all the Wall Streeters were telling you to invest in at the end of 2008, 2009? If they were telling you to invest in anything, they were saying buy safe companies. Buy Johnson & Johnson, buy Procter & Gamble, buy Walmart, buy those sorts of stocks, right? Kraft Heinz was one that was very popular back then. Those sorts of companies. I don't even know if it was Kraft Heinz back then. Actually, it might have just been Kraft, ticker symbol KFT back then. Those are the stocks that all the Wall Streeters are saying, if you're going to buy anything, buy those stocks, okay? You could have went that route. And what did you make over the next few years, right? Because I took this all the way out into 2011. You made a whole 3% on Johnson & Johnson stock. You made 1.7 percentage points on Procter & Gamble, and you made 1% return in Walmart. What did you make if you were investing into, let's call it growth companies back then, or the hated stocks during that crash, well, Netflix gave you a return of over 10x over the next couple of years. It returned over 1,000%. Amazon returned you 375%. Apple returned you 296%. Remember, Apple back in those days was a major growth company. It's very different than the Apple today, where we look at it as just kind of like, value stock, dividend stock, kind of boring company. Apple back then, that was still the Steve Jobs days. That was iPhone starting to take off, iPad starting to take off, all those products, right? 296% return that gave you. Goldman Sachs and JP Morgan, no one wanted the financials in the fall of 2008. You could not find a soul on Wall Street that would have told you, go buy JP Morgan stock, go buy Goldman Sachs stock at the end of 2008, going into 2009. No one would have told you that. But if you had bought those stocks, you got a 191% return in Goldman Sachs. You got a 97% return in JP Morgan, right? And the stocks they would have told you to go buy, these are the stocks you go buy, Johnson. You got nothing. You had nothing to show for it. This is why millionaires are made during these corrections, during crashes. Because if you know where to invest, you know how to find growth companies that are trading at ridiculous discounts during that particular time, you know how to find some incredible opportunities out there and some hated stocks that no one wants to own, that's where the biggest money's made. And that's where you see ridiculous inflows of money for the next bit of time. So remember this whenever you're going through corrections or crashes in the market. When you're in a correction or a crash in the market, buy growth stocks and hated stocks. It's going to be painful as you go down throughout that, right? Let's say, you're buying stocks and the NASDAQ's down, 12%, and NASDAQ ends up going down 30%. As long as you're buying that whole way, it's all gravy in the end. It's all good. You want to buy the growth in the hated stocks. That's where you're going to make the most returns as you come out of that correction or crash, right? Then, when you're late stage into a bull cycle, let's say it's been multi-years, you've been moving up, that's when you really want to start buying dividend stocks, value stocks. You want to start hedging. Because remember, when you're late stage in a bull rally, no one wants to own dividend stocks. No one wants to own value stocks. People are like, dude, I want the growth stocks. That one over there, that stock over there is up 400% in the past 15 months. Give me some of that. That's the easy money. People don't care about dividend stocks and value stocks when you're late stage in a bull market. That's exactly where you need to be flowing money into. Hedging opportunities. When you're late stage in a bull market, everybody forgets to hedge. No one wants to hedge. No one thinks the VIX is going to go crazy. No one thinks anything bad is going to happen, right? Because it's just gone up and up and up for several years. That's the time you hedge. And you can hedge for so cheap. Look back in December 2024. Look back at January 2025 at how incredibly cheap it was to hedge a portfolio. Oh my gosh, you could get insurance for so cheap. You get put options for so cheap because everybody just thought, Trump's getting in office and the market's only going to go up every day and no drama, no. Oh yeah, okay, hedge. And then buy what has already crashed in as high quality companies that have long histories of being high quality companies. You want to buy those when you're late stage in a bull market. That's when you see some incredible opportunities, and I can show you just that. Look at this. This is over the same time the NASDAQ has fallen 13%. A major drop, a good-sized drop, we'll call it that, for the NASDAQ, right? Look at EL stock. Look at ELF stock. Look at Nike stock. Nike stock is flat, while the NASDAQ's down 13%. ELF stock is up, while the NASDAQ's down 13%. And EL stock, Estee Lauder, is up 1%, while the NASDAQ's down 13%. What? What are we talking about here? Why is that? Those stocks already crashed. They already went through it. They already experienced what the market experienced just before the market experienced it. And so those ones are hard to get any more selling pressure because everybody that wanted to sell EL and ELF and Nike, they already did it over the last year, if not the last 2 years. They flooded out those stocks and couldn't just sell enough shares for the last year plus. And so now those stocks aren't even going down anymore. And yet the market's getting trampled. And you're seeing all these other stocks that were the hot stocks falling 30%, 40%, 50%, 60% falls, right? Dramatic. So you look at what I was buying over the past few months, right? I've been banging my hand on the table in regards to EL, ELF, Nike, these sorts of stocks recently, right? And if you've been watching my content over the last several months, people say, oh, you only talk about the same 10, 20 stocks. Well, gee, I'm not just going to talk about trash. I'm going to talk about companies that I believe are going to go up significantly over the next number of years. And so I'm not just going to talk about stocks to talk about stocks. Like, go watch another channel if you just want somebody to talk random stocks. Go watch CNBC and Bloomberg if you just want random stock talk. I'm going to talk about companies that I either believe are going to do tremendously well or tremendously bad over the next few years, because that's what actually matters. That's what matters in this game. And so, yeah, I've been talking about those stocks a lot the last few months, and I was buying them, and I'm making it through this just fine. Meanwhile, the stocks that everyone's been piling into over the last couple months, the end of 2024, beginning of 2025, look at what these stocks have done with this 13% correction in the NASDAQ. Coinbase is down 31%. Palantir is down 37%. Tesla's down 38%. Hood's down 40%. Hims is down 50%. AppLovin's down 53%. Incredible falls, right? You got to understand the stock market, you can make more money than you ever dreamt. More money than you ever dreamt. And I can tell you, if it wasn't for the stock market, there's no way I would be able to live the sort of lifestyle I have and have this sort of money. It'd be impossible. No way. Not for a community college dropout like me. But because of the stock market, I've been able to, been fortunate to amass an incredible amount of wealth, right? If you want to gamble in the stock market, you will pay the price. And it's a big price to pay. And what has transpired, and I've been calling this out for the last several months, is a lot of people started to really gamble in the market. They didn't understand how to value a company. They didn't understand any of this, the actual fundamentals around the stock market, how to be a successful investor. And they're paying the price big. Big, big. Not small, big, big. Like they've lost 30, 40, 50, 60% of their portfolio. Some were going even heavy into margin and now have gotten margin call after margin call after margin call. Some were going heavy into call options, and now all those options have expired worthless, and they lost 100%. Not even like they went down 30 or 40 or 50%. No, some of these people are down 100%, and it's not coming back. Some of these people have gotten margin called and lost 70% of their portfolios, 80% of their portfolio now because of this, right? You gamble, you will pay the price in this game, right? Stock market can be incredible, though. You can make more money than you ever dreamt in this game. But you kind of know what you're doing. And you're just gambling around, you're going to get gambling results. No different than somebody going down in the casino and they take $1,000 with them, and then they come back at the end of the night and they got nothing to show for it. Like, dang, I lost my $1,000. You gamble, you're going to get gambling results. And what's the only way you win when you're gambling? It's one way. You get lucky. That's the only way. That's the only way. 2, why are people freaking out over a small correction where the S&P 500 down 8-something%? I've been putting some thought into this because it actually has been worth my time and attention to really think how are people freaking out this bad? Like, I could understand if the S&P was down like 20%, 30%, even 15%, like I would get it. But I'm like, this is way too much just people freaking out over this. So here we go. Q4 2021 peak to the Q4 2022 low. The NASDAQ fell over 37%. The S&P 500 fell 25%. That's a very nice bear market right there. Very nice bear market. The summer of 2007 to the March 2009 low, keep in mind the market bottomed twice in the Great Financial Crisis. It actually double bottomed. It bottomed once in the fall time of 2008 and then bottomed again in March of 2009, essentially. All the indexes fell 50% in that crash. Very, very dramatic. A 50% fall for all of the indexes, right? So those are what I would call people should freak out, right? In panic, right? And if I even look at my YouTube channel in 2022, there was days in 2022 where I lost subscribers. Like people said, I'm done. I don't care about the stock market. I'm out of here. And at least I get it, right? It was a horrible financial decision that people would leave the market in 2022, by the way. Like they should have been buying every share in sight and just held through because they would have made so much freaking money. But they didn't. But at least I get it. Like I get why, a lot of people said, screw the stock market, I'm out of this. Like I'm leaving, this thing isn't for me or whatever, because it was a major crash. But the fact that I'm seeing so many people freak out over a small correction, I'm like, I really thought about this and I figured it out. Why people are freaking out so bad over 8.5% fall for the S&P 500 and a 13% fall for the NASDAQ. I figured it out. Here it is. Hood stock from the peak is down 45%. From the peak, Coinbase stock is down 42%. And this is all transpired in just the past few weeks, the last couple months here. MicroStrategy is down almost 52% from the recent peak it had. 52%. Tesla stock is down almost 54% from the recent peak it had. 54%. Oh my gosh. Palantir stock is down almost 39% from its recent peak just a few weeks ago. And then if you look at HIM stock from just a few weeks ago, from the recent peak, it's down 51%. I get it. I get it now, why people are freaking out so bad. Because I look at the market, I look at my portfolios, and I'm like, I'm not feeling it that bad. But then I look out there and the sentiment is just awful. You think it's the whole stock market's down 30, 40, 50%. Like literally, you would think we're in the great financial crisis right now. The way people are acting on social media, the way people are reacting to this whole market drop. I'm like, oh my gosh, people are panicked. Mostly retail. And then I'm like, how are they this panicked off of this little drop? We're in a small correction. Come on. And then I look at those stocks and I'm like, I get it. Because a lot of people piled in those stocks at the very end of 2024, beginning of this year. And now they're looking at their portfolios and like, oh my gosh, I lost 30%, 40%, 50%. I get it. I get it. And once again, some of those people were then margining money out because, it's so easy to make money in the stock market. Some of those people were buying call options. And that is why people are absolutely panicked. And that leads us into Trump. Because now I'm even seeing some people that voted for Trump are now mad at Trump because their net worth is going down. Ever since he got in office, they're looking and they're like, my net worth is going down. Real estate's going down, which we're going to get into in just a moment here. My stock portfolio is going down. Damn it, Trump. I voted for you. What the... And my thing to those people that are mad at Trump, like I could understand people that voted for Kamala being mad, right? Democrats, or people that didn't vote being mad. But if you voted for Trump and you're mad because your net worth is going down, I don't know what to tell you. Trump's doing exactly what you would expect Trump to do. Tariffs, this whole Doge situation, this is exactly what you would think. And so, like, that's what you voted for. Like, it's not like he's doing some playbook that, like, no one ever saw this coming. I don't know if people even paid attention to Trump in the first term. Because he's doing his exact same playbook again. It's just he's doing it quicker this time because he's already been through this game. So he's like, let me get this done year one rather than have to wait to year two like he did a lot of what he's doing this year. He did that in 2018 versus 2017 because he kind of got off to a little bit of a slow start to do a lot of what he wanted to do when he first got in, right? So yeah, people are freaking out. They're going crazy. And I'm like, dude, Trump's doing exactly what you would expect. It's not like he's going to some playbook that is like, whoa, we never saw this coming. So if you voted for Trump and now you're mad because your net worth is going down, I don't know what to tell you, man. I don't know what to tell you. But obviously that's happened in the stock market. People are losing net worth. And it's happening in real estate. I'm starting to see a lot of price cuts. I'm telling you guys, every day, Zillow is sending me multiple price cuts on properties. And I'm not talking about like $500,000 houses. I'm talking about multi-millions. The higher net worth people are actually getting freaked out bad. I just got this email literally just like, a half hour ago or so from Zillow. Zillow sent me this one. This house just got cut down to $3.9 million. They just did a $395,000 price cut on this bad boy. It's a pretty new house too. It's like, I think only a year or two old. And they just cut $395,000. And I'm looking and I'm like, dude, like real estate's going down. Like, look at this. $4.8 million they had listed for back November 30th. Then they lowered it in January. January 4th lowered it down to 4.39, right? And now they just lowered it down to 3.9. That's, guys, it's like, what, $900,000 of a price cut in a few months? In 4 months or so, 3-4 months? You're not going to do that sort of price cuts on a multi-million-dollar house like that unless you have little to no interest. Little to no interest. And once again, that's for a super modern, like, probably barely lived in or not even lived in home. And they're having a cut. And never mind, like we still haven't even gotten asset prices to really get hit that hard. Now imagine for a moment, S&P 500 goes down 20%. What do you think some of these home values are going to be? And a 20% drop for the S&P. Imagine Bitcoin goes under 50K. You want to really see pain? Then we're really talking. You want to really start seeing price cuts this spring? Oh boy, especially in some of these brackets. Oh boy, that's where things will get really interesting, right? If you guys ever get a chance, watch this video I put together. The Trump stock market will be a roller coaster ride. It's got 185,000 views. I released that on literally Inauguration Day. And, you know, I think that's a really valuable video. I laid out the whole Trump presidency and how I believe it's going to play out and all that good stuff and why I wasn't as bullish on this term as I was the first term. That's a good video. Like, you guys should check that out sometime, right? But you got to understand here, Trump is going to be he's very influenced this go around by Elon Musk, right? And you're going to understand Elon Musk. I don't think a lot of people understand a lot about Elon Musk, but one thing Elon does, he'll burn things to the ground, and he doesn't mind that. And so if it means to burn the economy to the ground to then rebuild, that's what's going to happen. Like, they'll do whatever they think is necessary over this next 6 months to put things in a position that they believe is best. Okay, now that's debatable if that is best or not, but that's what they believe. And so you got to understand with Elon, like, he's not scared to blow up a rocket, right? He'll launch one of those rockets, and if it blows up, we'll learn from it. That's the exact way his approach is on the economy and is in regards to Doge. He's like, dude, if it blows up, it blows up. We'll see. And so you got to understand they're taking that sort of approach, and the market doesn't feel comfortable with that. The market does not feel comfortable with this approach that Elon will take. Elon, you know, when he bought X, what did he cut 70% of the staff or whatever it was? That's Elon. Like, that's just the way he operates. He's like, if we got to burn it all to the ground, Tesla back in the day, they would have a whole assembly line do the job a certain way, and they would then switch the whole process. Elon would be like, this isn't working, we're switching in everything, and they would switch the whole assembly line and do it a fundamentally different way because that was better. I remember when they were trying to ramp Model 3, and they thought they had it all figured out, and the best way to ramp up production. And then Elon's like, no, this isn't best. Like, we need to completely change everything. And they built a tent. Literally, they built Model 3s in a tent and did it a whole different way. And that was the best way to do it. And so Trump has taken much more of an Elon approach. And I'm just saying the market doesn't feel comfortable with that. And I can understand it. I get it. But you got to understand the process they're going to do. Like, Elon's like got that approach. Like, dude, burn it all down, and then we'll start over, and then we'll rebuild. And that's what's going on now, right? Next up here, what did I buy here today, and why do I feel great? Okay. Well, what did I buy? I bought $60,000 worth of stocks, and here's what I bought. I bought $32,000 plus of AMD here today. I bought $3,700 worth of Honest stock here today. I bought $5,600 worth of Win stock here today, and I bought $18,000 plus of Shopify stock here today, okay? All four of those stocks are going to make some incredible upward moves in the next bull run. Now, it's debatable whether the bull run starts this month or whether the bull run starts in 6 months or 12 months. You could debate that all day. But in the next bull run, all four of those stocks are positioned to absolutely make some incredible moves. When I look at what's happened with Honest's numbers, when I look at what's going on with AMD's business model for the next several years, when I look at Wynn Resorts and how well positioned that company is, and especially come the Middle East property when that's done, and then Shopify is always a buy. Like, every dip on Shopify stock since the company went public is always a buy, and that remains to be a buy to this day. Okay, all dips are buys on Shopify. And so now the other thing I believe with all of these four stocks is I actually believe there's limited downside left in all four of these stocks, right? If I had to pick which one has the most downside potential, I would say Shopify. And that's if the NASDAQ got hit a lot harder. Let's say NASDAQ goes down another 10, 15, 20%, which once again, that might not happen, but let's just say it did hypothetically. Shopify has a furthest to fall in regards to that. Win stock's actually holding very well right now. Honest stock looks phenomenal. Phenomenal setup for the next several years. And then AMD is set up incredibly well. So that was a pretty heavy buy for me in regards to AMD here today, $32,000 buy. And AMD, even on daily today, like AMD outperformed the NASDAQ. Like, I'm watching AMD consistently not get hit that hard. Like, it seems like AMD was around $100 a while ago. And it's still around $100 roughly, right? 97, 100, somewhere around there. So it seems like it's starting to get really hard to get AMD down anymore, and that one's just going to make it. The next bull run, AMD's, And the move in AMD is going to shock people in the next bull run. That's all I'll say about that, okay? By the way, if you want to hear me talk more about individual stocks, check out the video I posted 5 days ago, 4 stocks I'm buying now, March 2025 edition. Looks like about 113,000 people have gotten to see this so far. That video talks a lot more about some stocks that are some phenomenal opportunities out there, okay? And also on the reaction channel, actually, a few days ago, I posted a video that I spent $70,000 on a stock, okay? Next up here, why I feel great. I have a few reasons why I feel great and why I feel very sanguine and calm and chill and all those sorts of things, okay? Reason number one is I have more income than expenses. I've had more income than expenses basically almost every single year since 2008. Since 2008, always more income than expenses, right? And the only time I didn't was when my first son was born. When my first son was born, essentially I took off a year. And I just chilled and did stocks for a year and didn't do anything work related, didn't have an income. So during that particular time, that's the only time since 2008 where I did not have more income than expenses, was during that like 1 year, a little over 1 year I took off and was just chilling. But outside of that, I always have more income than expenses. Same thing to this day. It's always been that way. And so I'm always ready to buy. I'm always ready to buy. And so for me, as a long-term investor, I'm not planning on retiring tomorrow. I'll also not plan on retiring next year or the year after. Like I love working, I love doing what I do, and so I don't plan on dipping anytime soon. I don't need, my ego's plenty big, okay? My ego's plenty big. I don't need my portfolio to say a certain number to inflate my ego any more than it already is. I'm good as far as that goes. I have plenty of confidence. I don't need my portfolio to say a certain number. So at the end of the day, I would rather have stock prices cheaper short term than higher. Do you think I would have rather buy AMD today at $97 a share? Or would I rather bought AMD at $197 a share? I'd much rather buy at 97 because I believe AMD is eventually going to be a $300, $500 stock. So I can buy a lot more shares at 97 than I can at 197 or 297. It's a simple game. More income than expenses. If you have more, I always tell you guys, what's the number one key to being a successful long-term investor? More income than expenses. That's half the battle, man. That's more than half the battle. Then from there, you can start worrying about P ratios, income statements, balance sheets, cash flows, how all this stuff works, right? Understand SWOT analysis, strengths, weaknesses, opportunities, threats of a business. You can play that game once you have this accomplished. But you gotta have more income than expenses. If you don't, what are you doing? Unless you're like me and you took a year off or something like that back in the day, right? What was that, like 2015 I did that, 2014? Reason number two that I feel so comfortable and feel great is I'm in beast companies. Like you look at my portfolios, they're loaded with beast companies. What is a beast company? Companies that have insane profits. You know, many of my companies are throwing off hundreds of millions of dollars of profit or billions of dollars of profit every 3 months. Incredible profitable companies. If you look at many of the biggest stocks I own, they all have beast balance sheets where they're loaded. Many of these companies are loaded with, hundreds of millions or billions of dollars of cash and short-term investments, long-term investments. Some of my companies have tens of billions of dollars. They have beast balance sheets. It doesn't matter what. Throw a recession at it, throw inflation at it, throw deflation at it, throw Trump at it, throw tariffs at it, throw whatever. Elon, Doge, blah, blah, blah. They're going to make it through just fine, out to the other side. And all those other things are there today, gone tomorrow, right? And then my companies are going to have growth regardless of the economic environment. You could say, well, if it's a bad economy, they might grow less. Fair. But many of my beast companies, my biggest investments, they're going to grow regardless. It's just a question of how strong are they going to grow? Are they growing at a 20% clip, a 30% clip, a 40% clip, right? 10% clip, 5%? That's the question. How strong is the growth? Okay. So that's reason number two. Reason number three that I feel great is GVD. My strategy for investing and building out a portfolio and building out a great portfolio is growth, value, dividends. I have growth stocks, I have value stocks, and dividend stocks in my portfolios. I'm not just a one-trick pony. I'm not just a boxer that can throw a haymaker, and if I don't land the haymaker, I'm screwed. Nope. And so that allows me to do well in any environment. Whatever the market, like throw a bad market at, and I'll be just fine. And I'll make it out to the other side and be just fine. And meanwhile, if stocks aren't going up, right, guess what? My hedges are probably doing good if I have hedges on the market at that particular time, as I recently had Toll Brothers hedges, what was that, a month or two ago? I had the Walmart hedges, I had Costco, those made me great money. But then my value and dividend stocks, they pay me out dividend money. dividend money, income into all my different portfolios. Just, thousands and thousands and thousands of dollars of dividend money just coming into my portfolios. And so then I'm able to take that money and invest it into companies while we're in a correction or a crash. Oh my gosh, like, you gotta be kidding me. It's perfect. This is how you set up a beast portfolio to make it through anything. Now, it doesn't just happen overnight where you just build out a beast portfolio. It happens over years, right? And many of my portfolios I've been building for many, many years. And that's how you do it. So the way I'll put it to you like this. Let's say I live in a town. And then a lot of people come into my town and it's sunny out. And I'm like, I lived in this town a long time. Like, it's been sunny quite a bit. And you know what? I see those clouds over there. I've seen those clouds a million times. Rain's coming. So I start going around the town and say, hey guys, I understand it's sunny right now and it looks great, but rain's coming. Like, get ready, get inside. It might be even a tornado. Like, get prepared here. Get in the bunker, maybe get some umbrellas out, something like that, right? Everybody's like, no, we're good. I'm like, listen. I lived in this town a long freaking time, okay? Listen, like, get ready. The rain's coming. I think there might be a tornado coming. I lived here a long damn time. And the new people in town, shut up, dude. I'm out here in the sun. I'm sunbathing, baby. Okay? I don't need to get ready for that. I'm like, okay, sweet. I'm going to go get my umbrellas. I'm going to go get in the bunker. Have fun, right? And then it's raining. It's awful. And people are like, oh, this is never going to end. And I'm like, no. We got to get ready. It's about to get sunny again. Like, get ready. I'm going to go put my shorts on and a t-shirt, baby. We're going to go catch some sun out here. And they're like, no. It's raining. It's bad now. I'm like, no. Like, it was raining. The sun's coming out now. Get ready. That's how I feel in regards to stock market sometimes, where, it'll look perfectly sunny. And I'm like, okay, I'm going to be buying these dividend value stocks, these hated stocks here. I'm going to be hedging. And everybody's like, no, we don't need to do that. It's only sun right now. And I'm like, okay, do what you want to do, right? And then guess what happens? You have a situation like 2022. You have a crash of the market, right? And I'm like, yeah, I know it looks rainy right now. I know inflation numbers are bad, but the sun's about to come out. We're going to have a lot of fun. And guess what I was buying? All those growth stocks and made fortunes on that. And people are like, no. It's going to get worse. It's going to get worse. It's going to be 20 tornadoes instead of one tornado, right? And I'm like, okay, I lived here a long time. You do what you want to do. I don't care. Do what you want to do. I'm just here to tell you what's going to happen. Just do what you want to do. There's a great book that's on the side of my bed. And usually I don't have it up on the stand like that. Usually it's in here. But it's called Mastering the Market Cycle by Howard Marks. Very good book. And the best part of that book is not trying to figure out exactly when a market's going to peak or when a market's going to start a next bull market. I don't think that's the most important part of that book. The most important part of that book right there is understanding that the market goes through ups and downs. It's a roller coaster ride. It's full of emotions. It's full of opinions. It's full of this and that, right? It's full of Wall Streeters being sheep and following each other around. It's full of a whole mess. But market cycles are natural, and they happen. Bear markets, bull markets, kangaroo markets, all part of the process. And the other thing that I think that book really teaches you is none of it's lasting. Bull markets are not lasting. Bear markets are not lasting. Kangaroo markets are not lasting. Now, bull markets last far longer than bear markets. True. But it's never forever. That's the thing. And you got to understand eventually that trend breaks, and then you go through a new market cycle, a new market dynamic. And the same thing happens across industries. And so I think that's a great book for reference to really understand on a deeper level. The market goes through these things, okay? It's part of the process. You can't fear it, just understand it's part of the process. It's no different than the sun rising and the sun setting. The sun rises and the sun sets. It's part of the process. It's daytime now, and in a few hours, guess what it's going to look like? It's going to look black outside, and I'm going to be able to see the stars, because that's part of the process. And then, 10, 12 hours after that, guess what's going to happen? The sun's going to be out again. It's a process. It's the same, it's a pattern. It repeats. So the same thing happens in the stock market. So you got to figure out, do you want to focus on the long term or you want to focus on the short term crap that's going on here today, gone tomorrow? It's up to you guys. Do what you want to do out there, okay? But if you're ready to take investing much more serious than you've been taking it, you want to apply to join a private group, that's pinned comment down there, fill out a form. We'll see if we can get you access to that. This week, let's get rocking and rolling. Like, why do we want to screw around and wait? Like, let's get rolling with this stuff, guys, okay? Much love and have a great day.